following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Thursday the 13th edition of the Option Block. You are not hearing the lovely voice of Mark Longo today because he is not available. So you have Mike Tosaw as your guest host today. It's always a chore doing this because of the fact, not because of the fact that I don't like it, it's just that I know that the shoes that I have to fill are about 7 sizes too big. But nonetheless, I will do my best, and I will introduce the usual cast of characters as per usual. The leadoff man for today in the cast of characters, we have Sean from Options Express. Sean, how are things going today out in OX land?
Rocking and rolling day here at OX land. Many calls, many trades, mostly happy traders who have been long for quite some time, holding into Big Ben's statement. A few not so happy who've continued to fight the market, but overall a very busy day on the trading desk over at OX.
All right, excited to hear some of the stories today, especially after Big Ben speaks. And also coming in live in a direct feed from the great state of Maine, the Rock Lobster himself. We have Andrew from the Option Pit. Andrew, how you doing today?
I am doing very well. The lobster is not in the boiling water today, which is good. He's riding the froth. Everything's good today.
That's good. That's good. We need to get you a bumper sticker then, riding the froth.
It definitely was frothy.
There we go. All right. Well, with that, let's dive into the trading block.
The Trading Block.
And welcome to the Trading Block, everybody. This is where we're going to talk about, well, what's trading today in the world. We had in the markets today, I'm showing here we had the Dow closing up 206 points, NASDAQ up 41, and the SPX up 23.5. So the bulls were definitely in charge today, no doubt about that. The market liked what Big Ben heard, apparently. Sean, tell us a little bit about some of the calls that you had at OX today. I imagine you have quite a few good war stories to tell our audience.
Well, I won't really go into the trade yet, into the actual Xpress block. However, it was a lot of silver and gold trades today over in OX land, followed by a couple VIX trades. Not so much the typical Apple, Google that I have been receiving over the last few weeks, but it was a very big metals day over here in OX.
Now, are Navabi and Grigas getting long a lot of futures on this today, or?
Not that I'm aware of, but
Okay.
There's probably a good possibility with the type of phone calls I receive. That's usually how it correlates.
Got it. Andrew, what's going on over there in the option pit?
Well, we had, everything's going on, really. Volatility coming in big. We've been writing a lot about how the sub futures gotten depressed, and it made the VIX actually a nice little back spread. It was down 173 today, almost down 2 full handles today at one point. So I think, I think we have room for volatility to go lower if we stop melting up, and we only melt up when we have a big announcement, apparently. If you notice, the market doesn't crash down anymore, it crashes up.
Right.
And I think we could see the volatility lows for the year again. Probably VIX breaking 13 between now over the next couple of weeks. It's been definitely rattling around a little bit, but the ECB's throwing money at this, the Fed's throwing money at this, and I think at least for the short term, there isn't kind of the big bogeyman. We've also noticed sort of the back month term structure for VIX futures is declined severely. So overall, it looks like the market has taken a lot of risk. The perception of risk going into the end of this year has dropped significantly, which is probably good for equities. And now everybody's going to sit around and look at each other and say, why don't I own any stock?
Especially when they don't own a lot of it.
Exactly. They're all sitting, they're sitting in cash. And as soon as they just, everybody should think like as soon as they decide to pour some money at the problem like TARP, it's hard for things just to go to zero, and I know that, but, we kind of practice what we preach here. So I think, going into the end of the year, everybody's going to be looking, they're like, oh, this 0.5% might not look so good. Because now they pretty much for sure aren't going to get any money now that Ben's going to buy an extra $40 billion a month worth of bonds until everything's better.
It's just amazing how easily that they can say billion. That's something else that just amazes me.
Isn't it?
Now you had mentioned a back spread. Are you guys in any back spread? You're in a specific back spread right now, or are you just thinking in general it would be a good time for it?
We like the gold back spread into the Bernanke conference. Gold as a back spread gamma wise has worked like the last three or four times I think that we put it on, just because it's like it's all algo driven information. Everybody piles in. Okay, they're gonna buy bonds. They're gonna have inflation. Gold's gonna go up, and it just rips. So that's been a good trade. The back spread we've actually done like just long VIX, short VIX. So like a long VIX call spread, long VIX put spreads or puts, and just let the things fly, and one side's going to take over. And just trades like that where normally you've never really had the market be a binomial event. And over the last 6 months, that's what we've been getting. We've been getting, it's either horrible or we're going to rip huge, and it's just, we've never before, I think, had so many events that are like telegraphed like that. Like there is going to be a big announcement and the Fed chairman will save the world, and that's kind of how it's been working. So it's easier to back spread a known event when the volatility is so darn cheap when you can have such a big move. So it's been easier to put those type of trades on, just kind of, in the meantime, you sort of muddle around, but you got to close all the short gamma before, they say anything. So that's what we've been doing.
Oh, yeah, and I think that makes a lot of sense. I mean, it's one where I would definitely not want to be selling calls in this environment for obvious reasons. Right. And not only just because of the fact that the market's been so insanely bullish, but you also have with there's just a lot of reasons not to be selling just outright calls right now. So with that in mind, a little bit about what's going on over in the land of Know Your Options. We are still in Apple for now, but as I was saying on previous shows, 700's been our target for a while, and right now we had it set up from when we were, as Andrew puts it, doing stuff to where we kind of ended up in the 690 calls for October with our collar that we had on. We kind of went from a back spread into a collar again, and so 690 is going to be pretty close to our target. If it goes above there, we're just going to kind of let it get called out right now. But yeah, with that, there's a lot of things to do in a market like this, and what's exciting about now is the fact that you can buy premium and it's really cheap. So normally if you're a premium seller and you're selling premium left and right, and that's just what you do, pretty difficult to do in a market like this. But now maybe even some of you premium sellers out there, you may want to look into going to the other side of the fence because premium's so cheap and you don't have to sweat as much on those credit spreads if they go against you. Food for thought. It's not right for everybody, but just kind of some of my thinking in general in the marketplace. Do we have anything else that we want to talk about in the trading block? I have one last thing, but before I do my one last thing for the trading block, anything from our all-star panel?
I want to mention something about what I used to see a lot of traders trading off of, a very important news report, and it seems to be ignored lately, and that is the initial claims and jobless report numbers. Again today, we had more claims than expected. The jobs report number at the beginning of the month for August was less jobs than expected. However, we continue to just keep rising and rising. And in the past, many traders trading off those numbers, when they would get 2-3 months in a row of more claims than expected, you would tend to see a downward movement in the market. But it seems like it may be a head fake for an hour when those come out, and then we just continue to rise. I mean, I'm just looking at the SPX, and basically from June to right now, we've gone from 1,300 to 1,450 on very bad job numbers and more claims. And I don't know if anybody really paid attention to the full speech of Bernanke today, but as he was speaking about the billions and billions of investing in this and that, he did indicate that he expects high unemployment for years to come. So I just don't understand if everybody's just ignoring that or just don't care about the unemployment number no more, and because everything else is rosy and the market's rising. So if anybody else could comment on that, I'd appreciate it.
I guess $40 billion a month wipes away everyone's tears, apparently.
I guess so.
So to me, it just sounds like a giant credit card debt. In that, let's say you're unemployed and you have a bunch of credit card debt, trying to make ends meet, and then you're stressed about it. Then all of a sudden, you get another credit card offer in the mail. Oh, great! We could eat this month. That's just kind of what it feels like to me.
Yeah, I mean, as we have constantly gone up, all these last couple, actually really 6 months of a constantly bullish move, we all know when the rock does fall, I should say, it falls a lot harder in a given day than it goes up over time. So my concern with all these traders who are, now fully believing we are at 100% bullish market, that one of these days where something goes wrong, China, and we drop 500 points, say, I'm not saying it's going to happen, and then all this bullish move over the last 6 months could easily be wiped out in a matter of a week or two.
Well, it's the old adage: the market takes the stairs up and the elevator down.
And what I think it's a lot of there's a lot of ignorance towards these very poor job numbers. And he clearly stated today, he expects high unemployment for years to come.
Yeah, I think he said till 2015 is when they said they were looking to stand by with the low interest rates, I believe. Is that correct?
Yeah, so I mean, it kind of seems like he's going to expect keep rates low because job numbers are going to get worse. So,
Aye. All right, my one last thing for this session on the trading block. With Greg Jennings out tonight, Bears-Packers score predictions, guys. The Packers aren't going to have the same receiving game. We need to know, what are you guys thinking in the Bears-Packer game tonight? Very important that our listeners need to know.
Are we throwing the 6-point spread in this?
You can throw in whatever you want. What do you think's going to happen?
Well, not knowing what the weather is in Green Bay, because that always plays a factor, I'm just going to assume it's pleasant like it is here, as long as it doesn't rain. I'm going to go. I find it very hard to see the Packers losing 2 games in a row at home to open the season. So with that said, I'm going to go Packers 31, Bears 17.
I'm sorry, is football started?
Yes, it has. We're in the midst of the NFL season. We'll just
There's no football in Maine.
There's no football in Maine. Yeah, there is. They got college football in Maine.
Yeah, they got high school football, They don't have pro football, though.
All right. So with that, Andrew's buying a straddle on the game.
Mike, your prediction?
Packers 27, Bears 21. Aaron Rodgers is going to pass for 400 yards.
Wow. That sounds like a love affair right there.
He's the man. He's ticked off after his loss. He's going to go wild. All right. Well, on that note, let's close the trading block, and we will dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is when Andrew can eat a little bit of his lobster and I can sit back and drink a little bit of water, and we can listen to the intelligence of Sean from Options Express today. Sean, what have you for us today on the Express Block?
Well, with the market up very large today, our phones were blowing off the horn with clients lining up to place some rather large trades, mostly to the upside with a constant bullish trend in mind. I did not see the usual Apple-Google trades that I have been seeing. I did not see the spreads, the straddles, the strangles, the iron condors that I've been seeing. More just going long single-legged option trades, and I'll go through, rattle off some that I stood out the most. I'll start out with the VIX. I did get somebody sold 500 of the VIX October 45 calls just for a dime. But, that's 5K. That's, VIX going to 45 in a month. I highly doubt it. That was really my only major VIX trade. But moving on to the financials, which also had a great move today. I had a 1,000 lot order of XLF. The September week 2s expiring tomorrow. I had a gentleman buy the September week 2 16 calls for 3 cents. I believe they're closed around 17. I'm not sure if he got out of those or if he's planning on blowing them out tomorrow. Moving on to the silver days. A lot of silver and gold trades. I'll start over at GLD. Had a nice GLD trade today. Another client buying 1,000 of the GLD December 255 calls for 6 cents. I'm pretty sure it's still in that range, but with gold moving from around 1550 to about 1740 in the last few months, I think he sees a trend. And this is a gentleman I was talking to in the gold 1550 range who believes we may hit 2,000 near the and 2,000 ounces on gold near the end of the year. Hence his reason for buying the December 255 calls at 6 cents. Moving on to some silver trades. We had a nice day trade today. Client buying 620 of the SLV November 30 calls at 385. And shortly after, selling them off, all 620 at 420. So he made a nice $35, 620 times. Not a bad trade for him. And then later on, he decided to get back into the trade, buying 600 more of the same Nov 30 calls at 410, which I believe he is holding at least till tomorrow. And lastly, but not least, moving back into the financials, Bank of America, which has been making a nice steady rise of late. This would be an earnings play from one of my earnings playing clients. Bought 1,500 of the Bank of America October $9 calls at 39 cents. Keep in mind, Bank of America has earnings on the 17th. These options expiring on the 19th. Again, he bought 1,500 of the October, 9 calls at 39 cents. They closed at 67 cents today. overall, almost 39,000 of those traded. So that was my standout trade of the day. And that's pretty much what I have for the Express block. Again, I'm still a little disturbed about all the clients, the news, ignoring these job numbers.
Yeah, it seems from what you're telling me that a lot of people are looking to really get bullish right now in the retail community. Am I catching that right?
Yeah, the only non-bullish trade I had, which stood out, one gentleman did buy a 750 Nokia October $2 puts at 6 cents.
Wow, that's quite a bit. All right, and that concludes the Express block for today. Now let's dive into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block. The Odd Block is the part of the show where we go over unusual activity. And Andrew, Mark's little birds are over at Know Your Options today on loan. I'm being told that you found an odd trade today in the financials. Are his little birds correct once again?
You know, his little birds, it's amazing how good they are. It's amazing how his little birds, how they tweet. How they tweet.
And they're not even on Twitter.
They just tweet and they tweet and they tweet. So what basically is, and this is actually a trade I like, you know, me being, what does he call me? A degenerate? No, degenerate premium buyer.
Yeah.
I made myself laugh there for a second. In the 17 level in October, 17 level in November, the XLF, somebody's buying all the junky little calls. No 17s, 82,000 went up today. Ox 17s, 219,000 in contracts went up. That's pretty good size. And with, this is the interesting part, with the XLF up roughly, because it really just took off like a shot after Bernanke from around the 1570 level to 1615. All these calls that we're buying actually kept the volatility up in October. The vol didn't drift down at all. So these are all buyers on the 17 line for like 7 cents on the Ox 17s, 14 cents on the No 17. So basically, they probably just lifted the offer, and their bid became, the bid as the market just started to run up a little bit. So, I like that. Normally, I would say you just buy out of the money calls, little spec. 16 volatility is still pretty cheap for the XLF. It's actually right now at the very bottom of its 52-week range for implied volatility out there. And when you have a day where the XLF can move 41 cents by October, if people start to get a little animal spirity, those could easily be a nice double, both those trades, the OC and the No. So the financial sector really hasn't, let's just say it hasn't really gotten out of the graveyard that 2008 put them in. I mean, it's not at the bottom anymore by any stretch, but it's not rallying like a lot of the technology and the NASDAQ and a lot of other stocks have. So I kind of like that as a little trade, to be honest. I would be jumping on there, buying something else, I wouldn't even mind buying a deep call or buying it at the money like the October 16s. But not too bad. A very interesting and a gigantic trade.
Yeah, that's for sure. That's some definite size, no doubt about it.
Yep, 25,000 lots at a cracker. It's still a 25,000 lot.
It's still a 25,000 lot.
It's
no matter
still pretty big.
Yeah, so you sure you didn't see Navabi doing any trading in there today, Sean?
Not that I'm aware of. He could be one of the, like the Lobster said, it's not just a 25,000 lot, there's multiple 25,000 lots. So perhaps Navabi is one of those 25,000 lots.
Yeah, he probably had to scale in then. That's good. All righty, anything else in the odd block? Anybody? Besides the fact that the guy from Maine doesn't even care about the game of the week tonight.
What is that, football?
Yes.
What is that? Isn't that a, don't they kick that ball around in Europe? Isn't that football?
Maybe he's watching Justin Verlander versus Chris Sale this evening.
I have kids. I have no time to watch football.
Got it.
You know, got a business to try to run here, got children, wife. When can I watch football? There's no football for me. That was single Andrew. Single Andrew got to watch football.
Single Andrew got to watch football, huh? All right. Well, anyway, that is going to conclude the odd block for today. And now we'll dive into the strategy block.
The strategy block.
And welcome to the strategy block. This is the part of the show where we talk about, you guessed it, strategy. What I want to talk about today, Andrew and I are kind of co-author the strategy block today. And what I want to go through today is the importance of being nimble in the marketplace. If you have a bear call spread on, if you had one on going into today, or if it were a down day, I would be saying the same thing about a bull put spread. You have to be prepared for things like this. I've met just a lot of traders in my career, and a lot of times I'll see something along the lines of how the market just happens to bite them one day when it was supposed to be a high probability trade. Now, when I say high probability trade, let's say that you had a bear call spread, and so long as the market doesn't move 20%, this bear call spread is going to expire worthless. I'm such a genius. Well, yes and no. You have to be ready for the time when it does. So what I want to emphasize today is to be nimble and be ready for larger movements like today, even if you have a high probability trade. And the expression that I want to leave you with, I know I've said it before, is one trader is talking to another trader, and the one trader says, yeah, I did really well selling puts on the SPX for years and years and years until 2008. I didn't do so well in 2008. I lost a lot of money, but who could have possibly predicted that? The other trader looks him in the eye and says, the person you were selling those puts to. So with that being said, I'm going to pass the baton over to Andrew at the option pit.
That was very well said. I like that. I'm going to use that.
It was kind of like one of those.
Well, I used to be a guy in the pit that used to buy the other.
You used to be the guy that predicted that stuff.
Well, you know, like, okay, well, you want to sell these into the hole, that's fine. Sometimes they do work. But as far as conditions, so if you're looking at market conditions of what's going on, okay, so from a strategy point of view, what we do at Option Pit is we try to figure out, you don't try to think too hard about what's going on. So we don't really have a whole lot of Fed announcements left. We don't have a whole lot of ECB left. They're basically going to show up at every auction and buy some bonds, which is probably pushing people back in to buying, let's say, Spanish and Italian debt, which is really the issue. So probably just the fact they did it once or twice will get people to go in and sort of scoop it up again until they can take the 3 years that it's going to take them to figure out how to fix all this. And, you know, if they have a little fiscal balance, they'll probably make it happen. And, you know, it's funny if you think about it, like how East Germany couldn't have been any worse of a shape than Greece is right now. But you know what? Germans brought them in, they unified them, and 10 years later, like East Germany, the wreck that it was, it's all integrated into Germany. So as long as there's, you know, some political common sense, which of course is very hard to come by, it is possible for a plan to be implemented. It's just going to take time, which, as long as the markets have some confidence that they're getting to an end. But the long story short is that big part of the risk, I think, in the equity market is starting to subside, unless, of course, it comes back. But as of right now, they're throwing enough money at it like we did to TARP, which was probably one of the most successful financial endeavors by the federal government. Because what killed us in the Depression was lack of liquidity, and TARP fixed it. So we've got these like big structural things that have just been lifted this week. And I think what everybody's coming to the realization why, nobody was buying it at 1200 in the SPX last year, okay? Nobody was buying at 1250, nobody was buying at 1300. But what happened was they were buying on every time the news slightly improved, that's what drove us up. And it's been happening now for about the year. Now we kind of have this, is it the right thing? But we have this backstop of information. So what's going to happen to market volatility now, right? We were in an environment where the VIX was pretty reliably 13, 14 was the bottom, and 25 to 40 was the top. Okay, if we don't have economic collapse or we don't have structural collapse, is 25, 40 VIX the high side? Maybe the high side's only like 20 on a little spook. And maybe we could see lows as low as a 10 VIX and having a realized volatility in the index go down to the single digits. Mike probably remembers this, but I remember like 13 volatility, at the money volatility being a sale on the SPX in 1995, when single digit volatility was the norm. So how do you trade this, right? So calls are super cheap, right? Probably getting cheaper, but the good thing is as volatility goes down, the gamma of the option is going to go up. So you're going to get this cheaper vol number, and it probably makes sense now to maybe buy some calls or even buy some time spreads. Because with vol so cheap, if we do get this kind of a rally, you're getting a lot less risk for those options. And even a time spread works because it's theta positive. So you buy an out of the money call spread, let's say Nov OC, a few strikes out or one strike out, and you just sit on it, right? And you can afford to sit on it, I think, now, because of that. The big downside is taken out of the market, and the fact that you have some theta going on. Short term, right, like iron butterflies and the weeklies and very short term contracts might work because we might see this extremely low realized vol. So you have that one trade structure versus a time spread or just buying some calls. And I think at least you have sort of a setup to trade the rest of this year. We'll probably get a little blip before the election. Who knows who's going to get elected, but that usually does bring some excitement. And after what happens normally after an election, we rally because at least we know who the president's going to be. There's no more speculation on who the guy's going to be. At least it's done. And if we've seen anything from the market this year is once the news is out, we tend to rally, and we rally hard. So just remember that, especially for any kind of short gamma trade you might have on a very, very short-term basis. But I'm kind of thinking, kind of time spread idea for like the Nov OC cycle playing into earnings this year. And anything you do selling options, I think it has to be on a very short-term basis. I think doing anything with like a 30 to 60-day time frame is going to be very tough because the implied volatility is going to end up being pretty darn cheap for what you sell it for. And if we get any kind of steady movement in one direction, which is possible, doesn't have to gap, it's just those trades aren't going to work. Actually, it alludes to something that Mike just said. Oh, I just sold this call spread. It was only a 10 delta call spread. Well, if we go up 25 basis points a day for 7 straight weeks, you might end up hitting that target, which is kind of what we did. Think January, February, March of this year. What did the market do when we thought we had kind of the European thing solved? The U.S. was still muddling around. The jobs picture was better. But I think as the confidence from European things starts to percolate through, the job picture will probably get a little better. And it just took the Europeans 2 years to decide to do it. That's all. So that's kind of my recipe. I think buying short-term options is going to be tough if the realized volatility starts to die. So I kind of like the idea of time spreads and stuff like that. And even buying calls now 2-3 months out in a time spread sort of fashion probably will fit with what we've got coming around the pike. So with that, that is my strategy idea as we trade around and behind the Great Bernanke.
The Great Bernanke. I love it. I love it. And that concludes the strategy block for today. And now let's conclude the show with Around the Block.
Around the Block.
And welcome to Around the Block, everybody. This is when we talk about what we are looking at in the marketplaces in the coming days. So we will start out now with Sean from Options Xpress. What is the trading desk looking at right now? Or what are they going to look at?
Well, with most of the news out for the probably next couple weeks or so, I mean, of course, we always have the, new home sales coming out next week, existing home sales, housing starts, things like that. But nothing that's drastically going to move the market one way or another. So we at the desk are looking for more clients or prospect clients to contact the desk for more of an educational type of conversation if they're not interested in placing trades right now. Reason being, we at Options Xpress are strongly very proactive in providing education to clients, not just in the business for taking commissions like many other firms are. So we strongly advise many customers, or anybody listening to the show is not a customer, to open an account at optionsexpress.com. There is no minimum amount of fund. You can open an account for free. And before you can even decide if you want to be a customer of Options Xpress, highly recommend you visit many of our daily webinars that not only take you through the site tour of the trading platform and shows you all the different tools we have to offer. I mean, every brokerage firm has a buy and sell button, but we at Options Express have a few other tools that we feel are superior to others. Like I've mentioned, the Idea Hub, the walk limit that I mentioned before, which is now also available to 3- and 4-legged option strategies. And also we have some webinars just from basics, learning the long in the money calls and shorting calls, as Andrew talked about earlier in the show. So as far as looking for the much more news, I'm looking forward to, personally, as I stressed more and earlier in the show, the September job number coming out in the first week of October.
I'm bored with the September jobs report. Couldn't resist. My apologies. But nonetheless, I do agree it does seem to be something that a lot of traders are literally taking that stance on. And we'll see if that continues. Andrew,
who needs jobs when you have money, when the Fed's pumping $40 billion a month
there you
to
go.
the mortgage? You know what? They're probably buying the only securities that have yield. It's not even like it's a gift. They're just like, screw it. We're just going to buy these things because it's the only thing with yield.
There you go.
Why do $40 billion? Might as well just make it $1 trillion.
Yeah, no kidding. Let's do it right. Andrew, what are you guys watching over at the pit?
Again, same thing, watching, how low volatility can go. I think some interesting things might be set up for the end of the year. That's kind of really the gig. How much more room can we get out of gold and some of the commodities? I guess it could still keep rallying. Tell you what, though, there's not a lot of good reasons for them to want to come down if there's just this constant flow of money coming in. So, I mean, it's not a trend I would want to fight. Let's put it that way for any of those things. But those are kind of the two biggie. What's funny is oil's kind of stopped. It was up today a little bit, but it's kind of sort of been stuck in the mud here a little bit. And I'm curious if any kind of real production in the U.S. is maybe starting to finally affect that. So that's kind of a little closet thing. I'm not something I'm looking at, but let's sort of, why are we back up at this sort of $96 or $97 a barrel level? So I find it a little, I find it curious that we got back up there so fast, but very well could be all this easing. I think easing is making everything more expensive.
Very good. Very good. All right. Well, with that, we will close out Around the Block for today. And now let's see what we have going on at our cast of characters' respective places of work. So, Andrew, since you're not watching any football, what the heck are you doing anyway?
I don't do much. It's me.
Yeah,
we cut down trees. I got to cut down some trees this weekend on my land, get ready for the winter. We have a free webinar at Option Pit today at 4 o'clock, which of course will be way too late for any of you to go to. But you will be able to download it. It's David Peltier from thestreet.com doing option strategies for trading stocks, $10 or less. It's a pretty darn good webinar. It will be free. You go to optionpit.com tomorrow and you will be able to download. It will cost you your email address so we can send you something once every 2 weeks just to let you know that we are still alive. But you do get a pretty darn good blog, which I might add, we had another website voted one of the best blogs on the internet for options. So I thought that was a pretty good plug. We didn't even have to plug it ourselves. Somebody else did. So it's always that's always good to see. And as far as that's kind of what we've got going on this week. And I don't know what else we have going on, to be honest. I have to look at the calendar. So that's pretty much it. But the webinar is a really good webinar, and I suggest anybody that listens to this show download and watch it. It'll be about an hour long, and definitely worthwhile. You know, there's a lot of stocks right now that are under $10 that have not participated in the SPX, in the SPX rally, and I think probably is a good time to look at them. So definitely worth a look.
Sounds good. Sounds good. All right, Sean, what's going on over in OX land?
Well, I won't be cutting down any trees like Andrew. However, we'll be watching the Bears-Packers this evening. As I said earlier, I made my prediction that the Packers would be beating the Bears, but I will be rooting for the Bears. I also will be watching the White Sox, hoping they regain that 2-game lead on the Tigers. Being from the South Side, I am a Sox fan, so sorry to all you Cub fans listening. But over in OX land, we do have a workshop out in Los Angeles. I did mention this last show, but I want to touch on it again since there's still time to sign up for it. It's in LA at the Marina del Rey Marriott Hotel. And you can simply, if you are a client or not a client, sign up at optionsexpress.com and go to the Education Center. Again, that will be on October 6th from 7:30 to 3:15 Los Angeles time. And again, I mentioned earlier as well, but I strongly suggest clients, prospects clients, open an account, do not need to fund, webinars every day, multiple times a day on various subjects, not only just on the platform. You can pick and choose the webinars you would like to watch. And that's it for OX Land today.
Sounds good. All right. Well, we'd like to thank everyone for coming today. It's always great to have all the listeners come on board and listen to our show. It's been a great show today. I'd just like to thank the usual cast of characters for coming on by, and excited about having Mr. Longo back next week in the big chair where he definitely belongs, because this is definitely the Longo ship, and I'm just glad to be the first mate for a day. Anyway, folks, make sure that you buy low and sell high, or buy high and sell higher, or do the reverse. So long, everybody.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.